you run a nonprofit or manage a private foundation, stop what you are doing because a major tax deadline is coming up. And missing it could cost you thousands of dollars in penalties, or worse, the loss of your tax-exempt status. I am Noura, a tax advisor and the founder of Noura's Books, and today I am breaking down everything you need to know. When your deadline actually is, which tax form you are supposed to file, what the differences are between a nonprofit and a private foundation, and what to do if you are not ready in time. Make sure you stay until the end. I have something important to ask you. Let's start with deadline, because not everyone's deadline is May 15th. And this is where a lot of organizations get confused. For tax-exempt organization, the filing deadline is the 15th day of the 5th month after your fiscal year ends. So the deadline depends on when your fiscal year closes. If your fiscal year ends December 31st, which is most organization, your deadline is May 15th. But if your organization operates on a different fiscal year, your deadline is different. If your fiscal year ends on December 31st, your filing deadline will be May 15th. If you make an extension, that's gonna give you 6 more months. So then your extension gives you until November 15th. If your fiscal year ends on March 31st, your filing deadline will be August 15th. If you make an extension, it's gonna give you 6 months. So your deadline will be February 15th. If your year ends on June 30, then your taxes deadline will be November 15th. If you make an extension, your deadline will be May 15th. Finally, if your year ends on September 30, then you should file by February 15th. If you make an extension, your new deadline will be August 15th. So the rule of thumb is take the last day of your fiscal year, count forward 4.5 months, and that is your deadline. If you are not sure what your fiscal year is, check your original IRS determination letter or your prior year return. Nonprofit file in the 990 series. Which version? Depends on your organization's size. But let me tell you upfront what I recommend, and then I'll explain why. Form 990N, also known as the e-postcard, it is for organizations with gross receipts of $50,000 or less. It does not provide much information, but it does protect your organization from losing its tax-exempt status and from penalties. Form 990EZ for organizations with gross receipts under $200,000 and total assets under $500,000, a shorter version of the full 990. Form 990, the full one, required for organizations with gross receipts of $200,000 or more or total assets of $500,000 or more. The most comprehensive return. Form 990PF filed by all private foundations regardless of size. This is separate return from the 990 series and has its own requirements. Now here's what I always tell my nonprofit clients. Even if you are eligible to file the 990N or the 990EZ, I recommend filing the full Form 990. Here's why. Form 990 is a public document. Anyone can look it up on GuideStar or the IRS website. When you file the full 990, you show funders, grant makers, and major donors exactly how your organization operates, how you use your money, and how strong your governance is. That transparency builds trust. And in my experience, nonprofits that file the full 990 are better positioned to receive major grants and large donations faster because the information funders need is already there. Don't shortchange your organization to save a little paperwork. Now that you know which form to file and why, let me walk you through the key difference between the two entities. Because understanding what you are changes everything about how you plan, how you operate, and how you are taxed. Nonprofits, public charities. A public charity exists to serve the public broadly. Think food banks, schools, mosques, community organizations, advocacy group. It gets its funding from many sources: individual donors, grants, events, government funding. Because of the broad public support, the IRS classifies it as a public charity. The biggest penalty risk here is a nonprofit fails to file for 3 consecutive years, the IRS automatically revokes its tax-exempt status. No warning, no grace periods. Donors can no longer deduct their contributions, and the organization loses its legal protection. I've seen organizations face tens of thousands of dollars in penalties and lose their status because they didn't know this rule. A private foundation is also a 501c3, but it is an entirely different structure. A private foundation is typically funded by one person, one family, or one corporation. It is a giving vehicle. You put money in, you invest it, and you distribute grants to the causes you care about. Every private foundation, regardless of size, files Form 990-PF. There is no simplified version. It must also distribute at least 5% of its assets annually to charity. And beyond compliance, a private foundation is one of the most powerful tax planning tools available to high-income individuals and business owners. My clients use it to significantly reduce their taxable income, protect their wealth, support causes they believe in, and build a lasting legacy. It's not just a tool for charity, it is a strategy. The purpose of nonprofit public charity is to serve the public broadly. The private foundation, it's a family or individual giving vehicle. Funding source for nonprofits, many donors, grants, and governments. The private foundation funded by one person, one family, or one corporation. Both of them are 501c3 tax exempt. For the nonprofit public charity, you file 990, 990EZ, or 990N. Private foundation, you file 990PF always, regardless of the size of the foundation. There is no distribution requirement for nonprofits, while private foundation must distribute 5% of their assets annually. Filing deadline are the same: the 15th day of the 5th month after the fiscal year end. Both of them get the 6-month extension if you file Form 8868. If you don't file on time, you risk the status after 3 years. After 3 years of non-filing for nonprofits. For private foundation, failure to file penalties compound quickly. If you are watching this and you are not ready to file, do not panic. You can file an extension for both nonprofits and private foundations. You file Form 8868 to get an automatic 6-month extension. No explanation is required. It is automatic as long as you file it before the deadline. So if your deadline is May 15th, you need to submit Form 8868 by May 15 to move your filing deadline to November 15. If you miss the deadline without filing an extension, the penalties are real. For nonprofits, it is $20 per day for smaller organizations and $100 per day for longer ones, up to $50,000 per return. And again, missing 3 consecutive years triggers automatic revocation of your exempt status. For private foundation, the penalties compound just as quickly. None of this is worth the risk. Here's what I want you to take away. Whether you are running a nonprofit or managing a private foundation, you have a legal obligation to file, and the consequences of missing that deadline are real. If you need help filing your Form 990 or 990PF, or if you are not ready and need an extension filed before the deadline, reach out today. Use the link below to book a time with me directly or call our office. Let's make sure you are covered. And now, Here is my question for you. If you want me to do a full video on how a private foundation works as a tax strategy, comment below private foundation. I read every comment, and if I see enough interest, that video is next. I am Noura Al-Masri, your tax advisor. See you next Monday.